Hello there, my friends. Chris Marcus here with you for another edition of Inside the Markets. And today I have a guest who is kind enough to join us to talk about the mining space and a lot of the developments that are going on as we sit there and watch gold and silver stagnate. Yet, fortunately, Joe Mazumdar from Exploration Insight digs into the mining space and helps his clients and readers find some of the opportunities so that for those who are looking to still make money, even while bullion prices have stayed flat. Fortunately, Joe is kind enough to join us. So, Joe, are you there? And how are you today, my friend?
Good, thank you. How's it going?
Pretty good. Better than it looks like for the stock market. So certainly volatile times here. The stock market getting beaten up again today pretty thoroughly for this week. And perhaps just to start off, be curious what you're seeing in the mining space in the face of all the volatility that we're seeing in general markets and how what you're looking at and what you're seeing today.
Yes, our focus is obviously on the mining sector, and we tend to focus right now on the riskiest part of a risky sector in the exploration side of it. So there are issues with respect to the broad market on the commodities, but the way we look at it is from the supply side. And what we can see on the supply side for a lot of commodities is that the producers right now don't have a lot of projects that generate the kind of returns they're looking for, the kind of double-digit returns they're looking for. And so they need to refill their coffers. And exploration is the only way to do it, and especially grassroots exploration. And so that's really our focus. So it's a little bit more agnostic on the absolute commodity prices, but obviously that comes into the issue about sentiment. But we're much more about trying to get a discovery, find a company that has a discovery, because we think that, well, actually we know that would be taken out. And that's been usually our, most of our success has been around that. And but this is not like a day trip where you can find these things and it's an overnight success. And then it's a discovery of like things like reservoir minerals that found the Timok deposit in Serbia. That was a journey of almost a decade to garner like 2,000+% return.
So, what is it like again with challenging financing environment? A lot of variables going together. How has it been going in terms of finding some of those explorations and finding good deals? I know there's the challenges where, especially for some of the companies that are cash strapped, makes it harder for them to move forward. Yet, when you have investors with capital, it seems like there are good projects out there that people can look into, and curious how that has been playing out this year.
Well, the thing is that what we've noticed is there's still some financings happening with certain projects, but most of the projects that we've seen, or companies, let's say, with projects that are financeable, have been in low geopolitical risk jurisdictions. We've seen a lot of things that can get financed in Canada, the US, Mexico, North America is still something that the retail sector is keen on. That seems to be where the asset's located has a big influence on whether a project can get financed. We find less money available for jurisdictions that the retail sector, especially the North American retail sector, is not fond of.
Right. And I know in one of your interviews, it was interesting. Gerardo Del Real was asking you about whether you focus on areas where there's good projects, but perhaps the politics leave a risky environment, or if you prefer maybe a less robust project, but in a safer jurisdiction. And I thought you had an interesting answer of how you approach that.
Well, the way we approach geopolitical risk, let's say, is if the producer, our end game with respect to an exit strategy is okay with the jurisdiction, then we're okay with it. the issue is that if a producer that would offer a premium to acquire the asset is not interested in the jurisdiction, it matters less whether that asset is good or not, because then the company itself has to build it and take into production, and that's a part of the cycle that we're less interested in.
Right. So it sounds like it really is a challenge, as you mentioned before, for companies that really want to go the whole process, and whereas it seems like you focus a bit more on projects that actually have a takeout potential so that you can see the end game when you're getting involved.
Absolutely. I mean, that's really the focus of trying to find an asymmetric risk profile. If you can find an asset where you could do enough of a study on the information available that suggests that the downside risk is limited in terms of the underlying asset, and you know the management team and they're technically adept, they can find money because they're capital market savvy, and it's in a place that can get permitted. There's no fatal flaws with the metallurgy. So you have to go through a lot of these technical risks and execution risks prior to think that, on the level of information you've got to say that, hey, this might be something somebody wants.
Right.
And if the more due diligence you do, the safer you feel with respect to the downside risk that you won't get, let's say, whipsawed with something coming out of the blue.
Right. And so for some of the companies that aren't falling into that category, aren't being looked at as a takeout candidate, obviously with the prices of the products they're selling on the low side, are or some of these companies reaching that point when they're in danger of, they may, if they had adequate financing, eventually be able to find good discoveries, yet if they go it on their own, just might not be able to make that whole bridge to get there. Are we getting close to the point where some of these miners are really struggling yet?
Well, if we talk about the exploration stage, I would say it's next. It's a significant hurdle for a management team that does exploration, the kinds that we invest in, to take a project from that stage to development to production. That doesn't happen very often, if at all. Like in big companies, they have all those skill sets, so they can take a company from project from grassroots to development and produce. Whereas it's impossible for a junior company to have that kind of breadth of management, because their G&A would be ridiculous and nobody would pay for it.
Right.
So they have to transition. And the problem is the transition usually doesn't work well, because you have a CEO who's a geologist in the early stage, then you move to a development engineer, then you move to, accounting or financial expert. And the steps in the transition, they don't always fall well.
Right.
And you have, you have big falls in the stock as it builds up again. But again, right now, with respect to risk, we'd prefer on the exploration side to take the risk at the drill bit than anything else.
Yeah, it's certainly, again, it seems like a fascinating environment because, again, for the ones that are cash strapped, it seems like there are good deals out there. And curious in terms of if you have a lot of clients that fit the profile of the silver and gold bugs, where a lot of us, and I put myself in this category, that have been expecting larger or higher bullion prices. I'm curious for people who are approaching it from that perspective, what is it you look for in terms of if you wanted to have companies that are really going to have leverage and outperform for those who are willing to wait for the price of bullion to rise? What characteristics or profiles would you prefer in a miner, at least for that particular purpose, as opposed to some that might not fit as well in that environment?
So if your thesis is that we're sitting at 1225 gold and you think 2019 is a good year for gold and potentially silver as well, then this is something we're going to do in the letter, and we tend to do at the end of the year, is we take a look, post-tax loss selling at the opportunities to buy into something now and potentially sell it before PDAC, which is usually a good liquid moment where people tend to be a little bit more optimistic.
Right.
So the idea then would be to look at trading options and then look at companies that are in the precious metal space, look at their last financials and see if they actually make any money.
Right.
Look at their free cash flow and then look at it per share. So do they have a tight share structure? And then look at the free cash flow per share and then look at, do they have a big debt position coming up? What's their working capital? Or do they need money? So if they have good news in January, are they going to go back and raise money? Right. So that's another thing to watch. But you want one with enough of a portfolio that one single asset doesn't drag them down.
Right, right. I know you've mentioned it before how a lot of these companies have really diluted their share structure to the point where you really need a massive discovery just to justify any return. So it sounds like that's one of the things people would be well served to watch out for, just how many shares are getting put out there.
Yeah, you could double the market cap, but if they, double the shares outstanding, they're not going to make any money as a shareholder.
Right.
So that's another issue, is that, under a good asset with a less than adequate or less than good share structures, somebody might make money on it, but it might not be the shareholders.
Right, right. And I know, obviously, want to be careful about how the management is using the financing and making sure it's going into the project in productive ways rather than otherwise. So perhaps in closing, just anything that you're looking forward to in terms of benchmarks. Obviously, we're wrapping up towards the end of 2018, and anything that you're seeing as things to keep an eye on for investors in the space going forward as we get ready to start 2019.
Like I would say, as a commodity, I think gold's in a good spot right now, and so that's something we're going to be taking a look at before the end of the year in terms of for our subscribers, in terms of opportunities going forward, in terms of trading positions over the next 2 to 3 months. That's something that we're going to be focused in on in the near term.
Right.
In the long term, we're still keen on the idea of finding high margin assets for the precious metal sector, and then we're also keen on commodities like copper. We're dabbling in nickel as well in terms of getting more exposure to the battery metals. So those, I think zinc's going to turn as well. So we keep those ones close to our vests right now. So there's a lot of commodities right now that have been put under a lot of pressure, and we continue to hold them because on the supply side, the issues remain. Even if demand doesn't change too much, there's not a lot of production coming out, and a lot of them have had issues meeting their deadlines. Right. And so that the potential surpluses or the weak deficits become worse. Which would be better on the commodity prices, if not for the issues of tariff wars, trading disputes, and a lot of other things that put a lot of uncertainty in terms of global trade.
Right. And especially as the pressure on the supply continues, again, that's one of those nice natural self-correcting aspects of the market where you have less supply, then that's a natural driver for some of these commodity prices. 2 other ones you didn't mention, curious if you have any particular opinion on, would be silver and uranium. And any thoughts on those 2 markets?
No, it's something we like. There's not too many pure silver plays out there. We have one called Minorum that's looking at precious metal veins with mostly silver in Mexico that we made one of our picks for in our last BNN interview back in October, I believe it was. So yeah, that one is hasn't fallen very much because the shareholders are basically long hold Europeans, and so it's done better in terms of this market than others. Right. So the share structure and the holders are very important. So yes, we do like silver, but it's been harder for us to find good silver plays. Right. I'll say that much. And in terms of uranium, the issue has always been for me that, you know, there's a big inventory of uranium out there, and until we see that coming down and people actually signing long-term contracts, I'm not talking about the spot price and the premiums that people are giving because they want to avoid long-term contracts because they don't want to get nailed into a $50 to $60 per pound contract when it's trading at about 30.
Right.
So right now that's the issue. Until I can see long-term contracts being signed, then I'm not too, let's say, optimistic about it.
Right, that makes sense, and certainly has been volatile a couple of years for both of those markets, and some good thoughts to be looking at there. Perhaps just in wrapping up, Joe, you could let folks know where they could find you. You have a great handle on the markets, and it's really a tricky space, not the kind of thing people want to just hop into without any background. So appreciate that you're offering your insight to your readers and clients, and if you can let folks just know how they can find you.
Right, you can find me, Joe Mazumdar, and Brent Cook at explorationinsights.com.
All right, it's a great site, and we actually met Brent and did an interview with him. I believe it was up in San Francisco. So it's nice to have some folks that are really digging into the space, giving some good analysis, and appreciate you coming on the show and sharing that today. And we'll look forward to catching up with you again soon as this market develops.
Thanks very much, Chris.